Hey, welcome back to YT Finance, and today we are talking about Nano Dimension, Palantir, and Cathie Wood of ARK Invest. We will start by going over the latest NNDM stock news, where Nano Dimension has received their ISO 9000 certification for quality management. After that, we will talk about how Palantir has landed another new partnership, and they even have invested into this company, which is fantastic news. Lastly, we will go over Cathie Wood's newest ARK fund, which is her transparency ETF. We will be analyzing this ETF to determine what's its purpose, what stocks does it hold, and if I think investors should buy into it or not. Go and press the like button right now for more NNDM, PLTR, and Cathie Wood stock news updates. Comment down below your thoughts on ARK's newest ETF. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. Nano Dimension is an industry-leading 3D printing company that has recently become ISO 9001:2015 certified. And what that means is that the company has obtained the highest standards for quality through its operations. The Director of Quality and Regulation of Nano Dimension said that our focus is to deliver the best experience to our customers so that we can meet or exceed their expectations all the time. ISO 9001 certification of our quality management system is a key part of that focus, end quote. This certification allows Nano Dimension to join over 1 million other companies across 170 countries that also have achieved this level of quality management. The president of Nano Dimension also commented on this achievement by saying, "Our commitment is to the continual improvement across all aspects of the Nano Dimension operation. This certification is an example of the company's commitment to all levels of the organization to drive excellence, quality, and performance for our customers," end quote. Now let's talk about Palantir Technologies and their PLTR stock. If you didn't know, recently 6 very large cryptocurrency companies appeared before the House Financial Services Committee to help lawmakers understand what regulations need to be in place to help crypto. According to the Director of Advocacy at Private Advisory Group, he said that a huge potential beneficiary of this development is that Palantir Technologies will greatly benefit from cryptocurrency regulation. Palantir already announced that its Foundry software can and will support cryptocurrency platforms in the near future, and this has already been proven because of Palantir's partnership with a cryptocurrency company named Elementus. The director even goes on to say, if that is the case, which I think it will be, this stock should be significantly higher, end quote. To add to that great news, Palantir also has formed a new partnership of sorts with Hyundai Heavy Industries Holdings, but more specifically with Hyundai Oil Bank, in which Palantir bought $20 million worth of this company's stock. Palantir plans to build a long-term relationship with Hyundai Oil Bank because they want Palantir to help them build smart factories in the near future. Through this collaboration, Palantir wants to help Hyundai Oil Bank through a digital transformation process, which could eventually lead to this company forming an IPO sometime in the coming year. A Hyundai Oil Bank official even said this about their collaboration with Palantir, and I quote, "Collaborating with Palantir will be a great opportunity to strengthen Hyundai Oil Bank's digital capabilities. We will do our best to establish and enhance our corporate value." Now, the reason why Palantir, which is a big data and analytics company, has decided and would even invest into a company like this is due to this company's future growth prospects when it comes to petrochemicals and hydrogen. In other news, the US is under great digital threats, so companies like Accenture and Palantir will actually thrive in this current environment. The Biden administration recently announced that it wants to fill 600,000 security and digital infrastructure positions to strengthen the United States' cybersecurity. President Biden even met with executives from Amazon, IBM, Alphabet, which is Google, Microsoft, and Apple for these companies to train thousands of new cybersecurity professionals. As you may recall, the Colonial Pipeline was shut down by a cyber attack back in May, and the company had to pay the hackers a large amount of money, otherwise people all throughout the East Coast could not get access to gasoline and other fuel products. What's What's even scarier is that the Department of Energy has said that hackers have the ability to shut down the US power grid if they wanted to. More recently, 9 state department officials had their iPhones hacked with spyware. But what does all this mean for companies like Palantir and Accenture? Well, if you don't know, Accenture is a professional services company and it consults some of the world's largest brands. They are very familiar with cybersecurity as well, because Accenture, ticker symbol ACN, is a fantastic company that has brought in $50 billion worth of revenue, and $4 billion of that revenue comes directly from their cybersecurity sector. So this could be a great company to get into right now. However, I think the stock price is rather high. On the other hand, we have companies like Palantir that will also benefit from these developments because their platforms and software along with their technology are extremely secure. They are so secure, in fact, that the CIA, FBI, and the US government/military either have used or currently are using their technology. Palantir also has rapidly growing revenues and margins on top of fantastic free cash flows of $320 million. Now, the reason why I am highlighting companies like Accenture and Palantir is because when you think of cybersecurity, those organizations probably don't come to mind. And for that reason, investing into companies like CrowdStrike, ticker symbol CRWD, which could pay off very handsomely during this time. What also could pay off very well in the future is investing into ETFs that are loaded with innovative and revolutionary growth stocks. But I want to specifically analyze Cathie Wood's newest transparency ETF, ticker symbol CTRU. The point of this ARK Invest ETF is to have a load of companies that are very clear, transparent, concise, and open about their business practices, their financials, and their auditing process, which makes these companies lower in risk comparatively to many other companies on the market. For the first trading day, this ARK fund was traded around 275,000 times. However, I think the debut of this ETF didn't have much hype behind it, which is pretty shocking, especially considering that this was released by ARK. This ETF focuses on environmental awareness, green energy, and social governance standards. On the flip side, this ETF will also not include companies that are related or do business with alcohol, banking, gambling, oil, and/or gas. Now, this ETF did not perform as well as ARK's second newest ETF, which is their Space Exploration ETF, which had 50 times more amount of value and money traded on the first trading day. However, we do have to recognize that this Space ETF came out during ARK's peak of popularity, and this new Transparency ETF clearly did not. Another reason why the debut of this ETF flopped was because there is not enough demand right now for an ETF of this sort. Yes, some specific stocks in these industries have done very well and are still doing well, but an ETF with over 100 holdings in it is not what the market's prerogative is directed to right now. Or it could be that investors are more speculative about this ETF and they don't want to invest right now, and instead they just want to see how it performs. Because ultimately, as the quote on screen says, this ETF's success will hinge on its performance. If the transparency approach can result in alpha, then clearly investors will take a second look here, but that's something that's going to have to be proven over a period of time. And I 100% agree with this approach. However, I actually don't think investors need to buy this ETF, and I'll explain why. The reason why I don't think investors need to buy this ETF is that it's not actively managed like other ARK funds. For example, in the other ARK funds like ARKK and ARKX, Cathie and her team of analysts buy and sell stocks on a daily basis. However, this is an indexed ETF like the PRNT ETF and the IZRL ETF, which means that they don't really change much. So why would I want to be charged a rather high 0.55% expense ratio for a fund that is not actively managed by Cathie Wood? I would be much better off simply buying into VOO or QQQ, which have a much lower expense ratio and a fantastic historical rate of return. Now, for those of you who still want to be exposed to this ETF and these transparent companies, I would simply go on ARK's website and download the PDF of all of their holdings for this ETF, which have been shown in these last two slides. Then I would simply invest into all of these companies at the weighting that the ETF shows me to do, so I will basically own an ARK fund that was handpicked by Cathie Wood completely free of charge without paying any expense ratio, and since this fund is not actively managed, I know that the stocks in here really won't change over time. But what do you think? Comment your thoughts down below, like this video right now, subscribe if you are new, and I will see you in the next YT video.